starting. All attendees are in listen-only mode.
All right, good morning, good afternoon, or good evening, depending on where you are joining us from. Welcome to our New York Wednesday session. Great to have you guys. I think it's most everybody who was here earlier, if I'm not mistaken. Oh, not everybody. It is nice to see you guys again. It's been a pretty nice day so far. Good evening, my dear friend. It's good to see you. I guess before we begin, I'll go over why I took the Dow trade, and it is working out nicely. We'll talk about... it's good to have you here, as always. It's great to see you. Thank you. So earlier today we talked about how this trend line was being used to potentially confirm the DAX, the FTSE trade, if it was to, we were to get a good setup there. What I ended up finding out, and again, we talked about a few different trend lines, and that second one that I placed also worked just fine. And so we had that breakout alongside the FTSE. We had a pullback, and then we had a big bearish engulf. That alone wasn't enough. Just having that happen with that trend line was not enough for me to take the trade. But what we had in addition was a very good standard setup after refresh on the 1 hour. And then what sealed the deal for me was this. Price did not touch support and resistance. Well, it depends on which support and resistance you're talking about, because the support and resistance I was using for the Euro session, which was the parallel trend line to the FTSE, was this trend line here. So we had a breakout, we had a pullback that went through it, and then we had a big engulf that came back through it again. And like I said, even if we used, that to confirm the entry. So, but, right. So, yes, absolutely. It's normally a midterm fib or a dynafib. That's correct. And that's why I was saying that alone was definitely not enough for me to take the trade. So, had that happened in isolation, I absolutely would not have taken that just based on the trend line PFT. No, absolutely not. But it was a good standard setup in terms of the momentum master on the 1 hour. It was a refreshed, and it was a good new setup. Everything else was a go. We had Williams. We had trend bars. Last cross was bearish. So from a standard setup point of view, it was a good standard setup. But what I'm saying, what sealed the deal for me, I thought the most important reason that the S&P did touch resistance, that's what I was saying. So what sealed the deal for me was what I saw in the S&P 500. And that is that the S&P 500 made a beautiful PFT on from 2062.5. So for me, this was the clincher. And when I compared the Dow standard setup to what was going on in the S&P 500, it was something, how I was saying earlier, I didn't take the oil trade yesterday because had it not won, I would have kicked myself. Well, this is one of those trades that's kind of the opposite. Had I not taken this and watched it win, I would have kicked myself, because it was such a good trade from a correlated market standpoint. So even though I didn't have a dynafib or a midterm fib on the Dow, I know that the S&P 500 is very highly correlated to the Dow, and I did have a midterm fib here. So between the good standard setup that I had on the Dow by itself, and then the wonderful support and resistance reason I had on the S&P 500, and then in addition to the trend line that I was watching for the European session, because honestly, during London, my goal is to get a FTSE or a DAX set up preferably, and then I try to trade the Dow after after New York Open. Omar, why do you take the Dow and not the S&P? The Dow's lot sizing is a lot easier for me to understand as far as how a point trades with a full lot. So, I know that the Dow trades $10 a point for a full lot, and so that's much easier for me to calculate. It always seems that I mess up when I take the S&P trade because the point system translates into dollars a little bit differently. So I've kind of hurt myself in the past doing that, either taking too small of a trade or too big of a trade. The Dow, especially because I stay up all night trading, the Dow is easier for me to mentally calculate quickly as far as how much risk I'm wanting to take and how it translates into dollars, because I know for a full lot a point is $10, and that's the only reason, because their movement is pretty much identical. And definitely, it's, again, I mean, these are, usually they have very, very parallel setups, but the reason I like the Dow over the S&P 500 is for the lot size calculation compared to risk, because I know instantly a point is $10. So that makes it much easier for me to figure out quickly. But again, where I think, oh yeah, you're welcome. I hope that helps answer your question. I don't have a more philosophical or better reason, I guess, other than it's just easier for me mentally to do the math. So as I said in the outlook, I think the next, if there is to be a continuation of this trade, and this trend line here, as I discussed in the London session today, was what I called the continuation trend line, that if we were to push further, we would have to break this trend line. So we did in, an hour after the entry, and we've ended up pulling back. And now I find this to be a very interesting place to see what happens next. So if we're going to have a bigger day, I would expect that we have a good sharp rejection away from this area of support and resistance, or it would make sense if we did. If we pass it by a bit, I'm not thinking that that would, destroy anything. It gets a little bit weird when you start looking at it from the S&P, because again, they're not always perfectly aligned. The same type of trend line doesn't work quite the same, so there's a little bit more room for the S&P to rise, which is why I'm thinking that it would be very possible on the Dow to see this trend line get breached. So essentially something similar to what happened earlier, where essentially the pressure move back into this trend line here would maybe go a bit past it, but the engulfing process would be the same. So I would be, prepared for that, and I'll keep an eye on the S&P 500 to look for again that same kind of parallel setup, and that's kind of one of my top picks for a potential trade today in the New York session is going to be the kind of combined S&P / Dow pullback to this recent trend line area, and then a continuation move away from it. And again, if we get a bigger pullback, it could come back as a refreshed and go standard again. But if we're just going to simply pressure it and reject, it would be a PFT, I guess. So we'll just have to see what the market brings. The FTSE and the DAX have not pulled back all that much, not really at all. We're starting to see maybe a little bit now after the U.S. news is out. But what I was talking about in the outlook is really kind of the area that we broke out from. It's about 99.35. I figured there would be a shot at the DAX, maybe coming back to this area and giving us a new signal from there. Although, maybe, maybe not. I figured the S&P 5, or sorry, the FTSE was probably a little bit too far down the road to expect to come back 80, 90 points back to 6,200, or even 70 points back to the trend line, and then make a fresh signal from there. So I don't really see that as much of a possibility. The FTSE has, been driven harder than the DAX for the last 2 days. One interesting phenomenon that's happened just this hour is gold. I was pretty much really focused on oil in the Dow, and actually, before I came upstairs to do this webinar, I took a look at gold, and I was really surprised to see, this move after the news. So essentially, this for me is step one of a potential gold setup, and you can see, obviously, it really depends on where we land at the end of this hour. Let's see, there is a gap on the gold 15-minute chart. Is this something that would normally get filled, or is it a non-factor? That's a good question. I don't know. I don't know what the fill rate is for gaps like that. Obviously, that that's a jump from the news. Yeah, I don't like to make assumptions or say things that I haven't researched or I don't know. So, and that's something that I couldn't answer. Usually gaps like that do get filled, but sometimes they don't. So I would say it would be, if we were going to now short to try to fill the gap, I think that would be a risky proposition. But it might be something to make a note of if it does get filled by the end of this hour, particularly that that would be, we could at least chalk that up for one anecdotal evidence that a jump after news. Yeah. Oh, curious for long. Oh, that it would pull back to get you into position. Well, that is that would be the plan. That if we can hold above 1285.75, I would love to see some bearish pressure, and that would be a good area to pull back to, something like 1282, 1283. Where exactly did the gap happen? It would be interesting if it was 1282, 1283 area where the gap occurred. So let me get back to the 15, and we'll see. It's probably more down 1280, yeah, 1280, 1282. Yeah, so the gap is between 1280 and 1282. It could overshoot, it certainly could overshoot. So, yeah, that was one of the things I wanted to say, is that, if we do clear 1285.75 and maybe this trend line, then I'll be looking for some bearish pressure followed by, a bullish engulf or a good signal in the other direction. But yeah, it would take quite a pullback at this point to fill the gap. Although we haven't popped yet on the bullish side for Momentum Master. So again, this is not the type of move I personally would chase. There is something to be said about the energy and the reversal factor of this move and where it seems to be landing. That it's a good breakout, and that it's back in line with the trend. But for me, it's not a trade setup. So it's a nice move, and yes, I think it's definitely chalk one up for the bullish argument for gold today. And it takes out the trend line we've been watching, and it looks like it's even going to take out this other trend line. It looks like it's going to take out 1285.75. It's going to retake 1283. So I mean there's a lot of good areas for this candle. If we get in 15 minutes a close in this area, that's it's a good argument for the bullish case for gold today. But I don't think it's a trade entry, so I will have to hold off and see what happens. And of course, you know, I always say this, it does come at the risk of me missing a really good move afterwards, but I don't want to be in a trade that I don't have confidence in the actual setup of. So what I'm hoping is that, you know, maybe we get a close here, maybe next hour we get, you know, a bearish push while we're kind of getting set up for oil, and then maybe we get a PFT after that, and in that case I would definitely like to long gold with a good breakout above 1285.75. You know, give me some bearish action back down, you know, heck, as far down as 1282 even, you know, or 1280, as long as I get the bullish engulf afterwards to essentially seal the deal and give me a setup. It's just that far too often, you know, we see these kind of news-related spikes that are quickly erased by the market the next hour, and I don't want to get caught gambling that this is not one of those. So I want the market to confirm that this breakout is indeed legitimate. I hope that makes sense. But of course, you know, you're always free to take the risks that you guys want to take. But for me, I would definitely have to wait for a good setup, because this is not going to be a standard setup at the end of this hour, and this is really just kind of the first step of a PFT. Although I would have a high degree of confidence if this ended up 2 hours from now being a PFT. I would have a high degree of confidence in that setup, and I'd be all over it. But we'll just have to see what develops. I think I covered the FTSE. I think the FTSE's kind of off the, as far as I'm concerned, FTSE's off the table today. I don't think that there's really enough day left for it to make a full move back up and then another good move back down. I don't see that as a realistic possibility. The Dow I do see as the Dow S&P, like we discussed early, I do see that as a possibility. Also the DAX, I think just because of the nature of how far and how fast it can move, you know, if we can get 99.25, 99, what was it, 99.35, that's really only 50-something pips from where we are now. And if we can get, you know, a run at that area and then a PFT away from that, I would definitely still be interested in trading the DAX. I think we have enough time left in the day for that to make good. And I'll be interested to see where the Dow finishes this hour. If it doesn't engulf this hour, then I would expect that we probably get one more bullish hour out of it, if there is to be a good turn. Otherwise, we might just go sideways, like we have done a lot lately with the index markets. This is a little bit... No, this is actually what? This is exactly right on par with what we would expect oil, right? This is exactly on par with what we would expect oil to, or the desired oil setup. Yeah, oil looks good. Let's just hope that we have a good solid bullish close, and you know, and then oh no, it's an hour early. It's an hour early. Then we might get maybe another bullish hour. I'm not sure, because it would be 6 o'clock my time by the time this hour finished. So that would still be an hour and a half before the news. That might not matter. Well, I mean, that could be the market making ready for the potential long setup. So think it's, it might be an hour early, but certainly our short setup, our desired short setup, is exactly the first part of it is what oil is doing right now, which is making a run at support and resistance with a good bullish attempt. And what we need to see immediately afterwards to get it on the next hour, which would be 30 minutes before the news. And again, sometimes crude oil inventories have no impact or very little impact on the movement of crude. So I don't always, it's not like an NFP of crude every week. So I'll be looking for the signal over the news. But usually, like we saw 2 weeks ago, the signal ended up lining up perfectly with the news and giving us the signal 30 minutes after the news release. So to kind of throw around some potentials, we may end up closing here and then making another bullish move the next hour, and then maybe after the news we get the big, a big bearish engulf, in which case I would short. However, we may end up also maybe making a stronger bullish move, and then we would need essentially a retrace and then a secondary move higher for the long. So the long seems a little bit trickier to obtain unless we put, in the next 9 minutes, unless we put a very, very strong move in oil. Because again, we're coming up to 45 again, and this time we have the benefit of the dynafibs. So, I mean, kind of my ideal setup is going to be this candle followed next hour by the, by the bearish engulf, which snaps the door shut on 45 and this candle, and I will short even if it's 30 minutes before news. I will take that risk, but do know it is, it's always a risk if you're taking a trade before news. But I don't think that crude oil inventories carries a specifically dangerous news risk. It certainly has an impact on the markets at times, but sometimes it really doesn't. So we'll just have to see. But this is certainly what what we would want for the pre-setup for a short on oil. And it looks like we're going to get a good, assuming we don't just, we may end up fizzling out in the next 8 minutes, and then I guess the next hour could be our bullish push. I'm really curious to see where we end up finishing this hour at. And this one might be kind of close too. Yeah, so we've got about 7 minutes before the end of the hour. Do you guys have any questions, any comments, anything you guys want to take a closer look at, anything I didn't cover, touch on, anything you want to discuss? Yeah, I figure everybody's pretty much in watching and waiting mode. As long as all the setups I've talked about are clear to everybody, then I'm satisfied with that. But I do want us to. I think we can certainly sit out the next 6 minutes and wait and see what happens. I wonder if gold will fizzle. it has been doing that a lot. Really strong move for most of the hour, and then in the last few minutes it goes away. Yeah, here we are in the last 5 minutes. Now it looks like it's having a little bit of a hard time holding the trend line. We're much closer to 1285.75 than we were, just 10 minutes ago. It's almost like that's 25 pips, I think, drop off. Now we're getting real close to 1285.75. It's going to be a close call, see if the Dow engulfs. Same with the S&P. I think either way, I think I'm going to wait this one out. It's not putting on a strong show at the end of the hour. There's a big difference. Even if this technically closes as an engulf, big difference between what happened this hour and what happened earlier. This one was, kept on driving towards the end of the hour to make new territory, and then pulled back a little bit right at the end. If this, just so happens that price is relieved right at the end and it drops down to the engulf point, it's not the market. To me, it's not the market showing us that there is strength to the downside. But it may be a non-factor. It may not engulf anyway. It may not engulf and then it may drop off anyway. But again, I just want to stick with my desired setup. Okay, so 1285.75 is not, well, it's close. This is gold. Probably close at 1285.75. And, depending on the broker you use, it could be a few pips above, a few pips below. Because I know there's always a difference. Because the spread is higher on Forex Broker Inc., I always compare the two. Seems like my oil runs are always better on Forex Broker Inc., but my gold trades are always better on LMAX. Yeah, it's just sitting right underneath there. Fascinating. I'm really curious to see what oil is going to do this next hour. What could happen as well, something that I didn't bring up, is that we may get a doji. We may end up with a doji next hour, and then our big bearish candle could come after news after all. So I forgot about the potential for the doji. That would suit me just fine. I'd be much more comfortable with that, having the engulf occur after the crude inventories, because at least the news would be out of the way, and it would be hard to find a reason to scotch that trade. As for the S&P's, oh, maybe not. Oh, yep, maybe so. S&P's got the engulf, but it's got no real support and resistance to engulf around. We got 15 seconds left in the hour. And gold is barely scratching above the support and resistance area. I think it'll clear it, but it's not going to clear the trend line. I don't know if you knew Telenex added CFD starting this week. Oh, that's fantastic. Oh, so does that mean that because I haven't, ever since they switched over, I haven't really used Talonx at all. I've been using Forex Broker Inc. Oil and indices. So can U.S. And I assume U.S. Members can use them still? I didn't know if they booted you guys or not. Because like I said, I haven't used them in a while. Oh, great. Oh, great. So that's another option. Definitely, I'll recheck them out because they might be more cost effective than Forex Broker Inc. Because Forex Broker Inc. does charge quite a bit in commissions. Although it's a good, it's a good option. I like their money. I like their money transfer. Ooh, we did get a good strong, a little stronger close with the Dow. Now I'm not going to take it though. That's great. It's, you know what, I'm really happy that more options are opening up for U.S. members. I've been researching. I continue to research the broker deal. I have found actually 3 or 4 more brokers that offer CFDs, but they're so sketchy that I wouldn't trust. I wouldn't trust them with $5. They seem really sketchy to me. So that's why I haven't brought it up, because I found some with various banks in the Caribbean and another area. Nothing against Caribbean banks. Some of the richest people in the world bank in the Caribbean, but you have to be you have to be choosy there as well. There's a big difference between the Cayman Islands and some of the other smaller islands. So. All right, guys. I hope that you are now well prepared for the session that lies ahead. I think, again, my two strongest possibilities are Dow and oil, and I'd really, just to sum it up, I'd really like maybe a little bit stronger bullish run against support and resistance, followed by the PFT rejection to go short. And oil, ideally either a doji and a bearish engulf, or a straight bearish engulf at the end of this hour. Or I guess, if we get another bullish, because this is still a pretty good little spot here, just above 45. That's a pretty good little area of support and resistance as well. If we got, a good pressure move this hour and then a good bearish engulf the next that took us below at least the bearish Dynafib, I would still, like to be in that trade there. In this underlying trend line, although it's an incredibly short-term trend line, probably still want to stick it for confirmation on the bearish engulf to show that the market has the strength to go against the, whatever, the 4-hour trend. But that would make sense. I mean, it certainly would make sense to have a swing there before I move down. We'll see. We'll see. It's always interesting. What I am happy to see is that at least we're getting some action, because I think tomorrow is going to be pretty boring. And then, of course, Friday will be exciting because we'll be together for the news trading. And we'll just have to see what works out. Hopefully, the next time we talk, it's cha-chings all around. And, make sure that you plan, prepare, and execute based off the planning and preparation. So I hope you guys have a fantastic day. Hopefully we make some more money. And I will catch you guys tomorrow. Of course, if you need anything or you guys want to talk, you can always reach me via email. I'm still trying to catch up from this weekend's emails. If I haven't got back to you, I apologize. I'm working on it. So have a good one. It's good to talk to you. Thank you very much. I appreciate it. Have a great day, and let's go make some money.